So, we are a private lending community where we connect, learn, and grow together. And we also welcome friends of the industry like Rob, but also borrowers, investors. And we do these webinars a few times a month on different topics to educate our lenders and our investors on how to be better private lenders, but also just how to be a better friend to lenders in the industry. So today we are here with Rob. Do you go by Rob or Robert?
Either.
Okay. I'm going to switch back and forth. Today, we're here with Robert from Monarch IRA, and thank you for joining us. We're going to be talking about self-directed IRAs. So, we will do, a couple questions that I want to ask to kind of set the scene, and then you have a presentation that you're going to share. Is that right?
Yeah, sure. I've got some slides.
Okay, awesome. So, first, let's do an introduction. Can you tell us about yourself and how you got into this work?
Yeah, I mean, as you can probably tell, I'm not originally from America. No one's perfect, but yeah, I grew up in London, and my whole background is in golf, so playing golf, loved golf mad,
Oh, wow.
and from there, I wanted to become Tiger Woods, but I didn't have Tiger Woods' ability, basically. So what a lot of golfers do, they don't play golf, they teach golf. So when you turn professional, you don't spend any time playing it, you just teach it.
Oh.
And I didn't really want to do that. And so I was exploring my options. I felt a bit lost. And I come across a book called Rich Dad, Poor Dad,
Hmm.
which opened my mind up. At 23 years old, I read that book in 2011, November 2011. And that opened my mind to maybe just going to work and for someone else for the next 50 years of my life, like all my family and everyone I ever knew did.
Hmm.
Maybe there's another way. And so I read that book and I decided to start investing into property.
Hmm.
I got started through some creative strategies, and thanks to people like you who put lenders in front of people like me, because when I
Hmm.
started, I didn't have any money to invest, but people saw value in what I offered and the opportunities. I got 9 properties in my first year.
Oh, wow.
Um, yeah, and then quit my minimum wage job. I don't need you anymore.
Yeah.
And yeah, and it serves me really, really well. Those properties are in England. I
Okay.
still have quite a few now. And then had the urge to move overseas in like 2019. The government had also made some tax changes in the UK, which I wasn't a fan of. And so I got the opportunity through real estate investing. I knew about self-directed IRAs. They weren't a thing in the UK. I'd learned about them through the people, the American investors that I connected with, and I knew how powerful they were. And I wish they were a tool that you could use in the UK. And so through my connections in real estate investing, I connected with Monarch and been at the company for quite a few years now. And we provide self-directed IRAs mainly for real estate investors and folks who want to lend their money.
Okay.
There are other uses, but that's what we focus on.
Wait, so you said you started your real estate investing journey at 23?
Yeah, yeah,
Wow. Okay. That's amazing. Okay, so then do you also invest here in the US?
yeah. Always on the lookout for a deal.
Wow.
US
Okay.
is the best market. Like you can't believe the amount of regulation and heart and red tape and things I went through to buy those properties. Here, everyone has a much better attitude. There's less red tape. People are more open-minded. The market's 50 times bigger. So it is the land of the opportunity. It's a cheesy phrase, but it really is.
I think that's also good to hear, like for people who are from here, because sometimes they take for granted, the opportunities that they have, and there's a
Yeah.
lot of complaining. But when you hear someone else who maybe wasn't born here
Oh
say,
yeah.
no, this is the land of opportunity, and then they're like, oh, it's a different perspective. So that's really good to hear. And did you invest in real estate with your self-directed IRA, or is that all other funds?
Well, I didn't have one back then in the UK. It was all sort of investors' funds, but a lot of the profits I made from property I funneled into a retirement account to reduce my taxes. So
Oh, like on the pre-tax side.
on the pre-tax side, yeah, yeah.
Interesting. Mm.
That's basically the only option in the UK. There is no other option.
Oh. Oh, you mean like there's no post-tax retirement?
No, doesn't
Oh,
exist.
oh
Yeah.
wow. The more you
Yeah.
know. Look at that. That's so interesting. Okay, so what other things have you seen people do with self-directed IRAs other than real estate and private lending?
Um, I'll tell this story now, but I've got a slide for it. There's a famous guy, you know, Peter Thiel. Have you heard of Peter Thiel?
No, not yet.
He's been on a lot of business podcasts and he's been on, lots of TV programs and whatnot. He's worth, I don't know, about $20 billion. But back in 1999, he invested into PayPal. He,
Oh, okay.
he invested $2,000 from his self-directed Roth IRA into PayPal. Fast forward a few years, eBay bought that business, I think, for 1.5 billion. And he owned a significant share of that. And so the value of his Roth IRA went from 2000 to many hundreds of millions. He reinvested that into Facebook and some other stocks now. And basically the value of his Roth IRA today is $5 billion.
Oh my goodness.
Yeah.
What are the odds of getting it right twice like that? That's
I'm
crazy.
sure he's got a few wrong, but
Yeah. But you
it's
got the ones
yeah,
right that matter.
yeah,
Yeah.
exactly.
Okay.
Exactly. So yeah, I mean it's an extreme example, but hey, if he just had a Roth IRA at Fidelity, none of that's possible.
That's true. Yeah. Okay, good to know. So since you were going to cover that, I'll let you get into your presentation and then I'll ask any additional questions after that.
Sure.
Let me
Sure. Yeah. Do you want me to load up the slides? Yeah.
Yes.
Okay, cool.
You should be
Uh,
able to share.
okay. Yep. Alrighty. Let me just load this up for you.
And you said his name is Peter Thiel?
Till, yeah, Thiel.
Okay.
Yeah.
Interesting.
Very, very interesting.
He's only 57. Oh my
I
God.
know. I know. Um, yeah, he tells people about how he invested into PayPal and how he done it, but he doesn't tell the Roth IRA part, which is really annoying for me.
Mm,
Because I could clip that up in a video and use it in our marketing.
right. Yeah.
Um, but yeah, I would just want to show you some retirement stats in the US. People are not so focused on retirement.
Mhm.
So I've got some kind of stats here that I've pulled off some official government websites. 50% of Americans households do not have any retirement savings, which is scary because a lot of people you're not working in Walmart at 70 years old for the fun of it. You're doing it because you don't have enough retirement. 76% of people won't be able to retire comfortably. Most people are unaware of the options. So they've never heard about a self-directed IRA. They don't know the fact that you could lend the money, invest it into real estate, invest it into companies that are not yet on the stock market, like Peter did, as a way of growing and saving for investment. Um, if you really dig in to the fees on 401ks, you'll be shocked. There's a
Mm,
famous video of Tony Robbins. He goes through the fees on 401ks. Because if you think if someone starts at 25 and they stay at that job for 40 years, that financial institution has got fees off that person for 40 years.
mm,
So the lifetime value of that customer is outrageously valuable. So it's really important people know the fees because if your 401k grows 6%, but the provider charges you 2%, you've only grown 4%.
But they never say that. Like no one ever
Yeah,
talks about that. And they always encourage you to invest in your 401k at work, but no one educates
yeah.
you on the fees or anything.
Well, you join on day one or early on, you get this piece of paper saying sign up for a 401k, and you have no choice of who it's with, what it's invested into, and some people don't really know. Many employers don't offer a retirement plan. There's also a big problem of self-employed people. The biggest issue I see in retirement is with self-employed people. They are not aware. No one's forcing them to invest into retirement. So of the tens of thousands of calls I have, the people that I love to help the most are people that are self-employed
Mm,
because they've got the best advantages and they have the ability to invest into retirement, but they're just a little bit unaware of how to do it. And many people live for the now and don't think for the future. Okay, so usually, 20, 30-year olds, they're not thinking about for when they're 65 and 70.
yeah.
And if you think these days, if you want to retire at 60, often a lot of us can live to 100. So that
Mm,
retirement money's got to last for 40 years.
mm,
Whereas if we go rewind back the clock, the average age maybe of death was 70 and retirement only needed to last 5 years. Whereas now it's getting more and more and more. So it's getting more and more important. So yeah, I mean, with self-directed IRAs, you're fully in control of your retirement. If it goes great, that's down to you. If it doesn't, it's down to you. But it's about taking financial responsibility. You
mm.
have access to all investment opportunities, not just Wall Street. You can get consistent double-digit returns. I mean, I know it can vary, Ashley. What are you in your community? What's sort of the ballpark figures of what people can get on their lending?
Yeah, that's a good question. I will talk about my own lending because everyone in the community is in a different niche, so we don't just do real estate. Some people do equipment financing and different types of loans, but for me, I don't do anything less than 10% profit on a loan. And the most I've gotten is 40%. So it's really
Wow.
transaction dependent, but the lender sets their own rates. And so you can decide that we had someone post the other day asking for an 8% loan for 15 years. Now, as the lender, you can decide if that's something you want to do. Of course, that's not something that I'm going to do because my minimum is 10%, but if that's something that the person wants to do, they can. So it's really up to you.
Hmm. Sure, sure. But double digit is kind of an industry standard,
Yeah.
even in the 20s, possibly sort of 30s. That in a retirement account is unheard of. In a 401k, it might happen a couple of years in a good, if the market's up, but
Hmm.
this doesn't happen a lot. With with self-directed, your fees from day one,
Hmm.
which is a flat rate fee, which is important, and you get to be proud of what you're doing. If at 60, 65, you've built a $2 million retirement account and you've lent that money out, you've done that. Whereas kind of if Wall Street done it, they did it for you. So you kind
Yeah.
of get to be more proud of what you do. And doing it through an IRA, the profits are tax-free or tax deferred, which is a huge, huge, huge benefit because we all know taxes, in my opinion, will only get higher. Okay, so I want to introduce you to. So here's how we structure a self-directed IRA. This is kind of the secret of it all.
Okay.
So if you were to go to Fidelity, Vanguard, Merrill Lynch, Charles Schwab, Chase Bank, they would open you up an IRA on an iPhone app in 30 seconds. Very, very easy. Okay. And none of those companies are bad. I actually think they're quite good. However, they will only limit you to Wall Street investments, mutual funds, stocks, and a couple of other options. If you do want to have other investment opportunities like private lending, real estate, crypto, precious metals, that's in the realm of self-directed IRAs. A
Hmm.
self-directed IRA structure is different to just going on an iPhone app and creating an account with Fidelity. So it looks like this. And this is what our company Monarch does and sets up. So we set up an IRA account in the customer's name. And then we also establish a retirement LLC to invest and protect that IRA. That LLC comes along with a checking account. So our clients have a routing and an account number, a debit card, writing checks, wire money. So however you're looking to do your transactions in and out, they have full control over. So the legal framework, and to take you sort of behind the curtain, looks a bit like this. The IRA account owns the LLC. The common mistake is that the human or the client owns the LLC. That's not true. The IRA account owns the LLC, and the client is the manager of the LLC. So
Hmm.
they're managing the investments in the LLC, and all monies are to benefit the IRA. They can manage it and control it through the bank account, and they have options like you see on the right-hand side. So all of the options that you see on the right-hand side, a normal IRA provider won't facilitate those transactions. And these are some of the juicier ones that you see on the right-hand side.
Yeah.
Gold is doing really well now. Crypto's doing great. Lending, if you know what you're doing, is great. Real estate, again, if you know what you're doing, is awesome. So these are the ones that are getting the best returns. You can still do the stocks and bonds and normal things. So nothing's off limits. So that's how a self-directed IRA is structured. The main rule is that any investment that's come out of the LLC bank account, and let's say you've lent $10,000, for example, and you've made a 20% interest rate, if $10,000 goes out, once the loan is repaid, so the $10,000 comes back to the bank account plus the interest. So any capital gain, interest, or profit, all of it must go back to the bank account. And then you have access to those monies to live on once you're at retirement age. Some people try and say, oh, can I pay myself a wage and things like that? This is not a business. This is a retirement account. And so I want to make that abundantly clear that that's not allowed. So you are the manager of it, and you get to choose how and where that IRA grows, but all funds must be returned to the IRA bank account so that you can reinvest it again or choose other options. So that's the power of a self-directed IRA right there. Looking at some options here, we spoke about this guy before.
Mm.
I brought up an article about him, talking about how he got into PayPal in 1999. He was able to grow that tax-free, which is pretty insane. $2,000 into PayPal. eBay bought that for 1.5 billion. His Roth IRA ballooned, and I think that's an understatement, tax-free. And he put it into Facebook and some other great stocks there as well.
He was only 31 when he made that investment.
Yeah, amazing, isn't it?
That is crazy to me. Okay.
So if you think you have the next PayPal or the next Facebook, and there's a group of college nerds, okay, and they've got the next best tech, thing, and they're doing an early round raising money seed, potentially your Roth IRA could invest into that and
Yeah.
reap the rewards that he did as well. And
Wow.
we've done a couple of these for gentlemen that that are in the tech game, and they've invested into their friends' tech businesses who they know the tech and they know the ins and outs of that business. They've done that through the Roth IRA, and it's really working out.
Wow.
So,
And so when the value of the shares in the Roth IRA increase, do they just then sell them either back to the company or like on the open market, or is that how they get the value out of that?
I think, well, eBay would have paid, um, eBay would have paid PayPal. He owns a certain, his Roth IRA earns a certain amount of PayPal, and he would have exchanged his equity for dollars back.
Ah,
Um,
gotcha.
and yeah, and then repeat that again. And I'm sure he's done it many, many times. Um, yeah, in 2021, 5 billion today, 4 years later, depending on what he's invested in, it wouldn't be unheard of that could be breaking 10 billion.
That is phenomenal.
So, and it's an extreme example, but you're just never going to get there with standard investing.
Yeah.
So yeah. So here's a case study, and it's kind of more in your realm, Ashley. So if there was a person at 40 years old,
Hmm.
they had an IRA, the value of the IRA was $50,000 today.
Hmm.
Okay. And at 65, they could just invest it into traditional stocks and mutual funds and make an average return of 7%. The value of that account at 65 years old is 271,000. If they choose option two, let's say, and they decided to private lend that at an average of 15%,
Oh,
the value of that account is over $1.6 million.
wow.
Yeah.
That is a very big difference.
So when people say to me, "Shall I invest my IRA? Shall I not?" Well, it's a $1.2 million difference. So the value of your education and teaching them to do this in the correct way could mean millions of dollars. And this is just through the IRA.
Yeah, that's crazy.
So $271,000 is nowhere near enough to retire on, and $1.6 million is enough to retire on. So it's the difference between carrying on working and having a comfortable lifestyle. Now,
Yeah.
obviously, this is not a financial claim. People have to learn what to do. They need to, there's risk involved in everything. They need to learn how to invest, etc., etc. I'm not here to give, but that's a great example of 7% to 15%. Doesn't seem that much difference. But you fast forward that over 25 years, it's a crazy amount.
Yeah. And a lot of, I actually have a student in the Coming Accelerator who has a similar scenario, about 40 years old, starting with about 50,000 from an old 401k. So this is real. And a lot of times people are, in their 50s or older and are realizing that they're not going to have enough. And those are the people who are like, I need to accelerate this and
Yeah.
take it to a new level
Yeah.
very quickly. So,
Yeah. And it's not say you can't do, you have to do one or the other. You could do half of one and half of the other. It's a mix. But certainly adding private lending where you're going to make 15, 20%, which is completely normal, is certainly going to get you where you want to be faster.
yeah.
And yeah, and that's the average client that comes to see me is about 40 years old, has about 50 grand. And yeah. So especially if the person has to pay taxes on that 271,000, it's not it's not looking
Yeah.
great.
That's,
And who knows what taxes will be in 25 years' time. So that's another thing, which is another discussion in itself. But let's go through some private lending, and I'm sure you know these rules, but I'll go through some private lending rules within an IRA specifically. So you are allowed to invest your IRA. There are some rules and regulations about that. So you can invest your loan money to non-disqualified individuals or entities, and you'll get some tax advantaged interest income. There is no legal minimum interest rate.
hmm,
So legally, you can lend the money at what you want. However, it does need to be considered at a market rate, which is a grey area, a market rate or higher. Now, as you say, you're in the business of getting your clients, the best returns and the best investments. And so any loan cannot be considered a gift or below market transaction. So for an example, if you've got a cousin, Ashley, and you lend them money at 3%, that's
mm,
probably you doing that cousin a favor.
mhm,
Okay. And so you're taking advantage of your IRA. So that's not allowed. So every transaction has to be deemed at market rate. Okay. 6%, I would say upwards. 25%, if you can do 30, 40%, that's great. Obviously, on collateral, borrow risk, how long they need the money for, all of these things are to be taken into example. But the minimum interest rate, just make sure it doesn't, from the IRS's point of view, it's not a gift or a below market transaction. Okay, so let's go through the next one here. Loan term. There isn't one, basically. So you could lend for 1 day or you could lend for one lifetime. As long as you're seeing a return on that, and there needs to be a loan agreement or a promissory note. That is a very important legal document that an IRA provider would need to hold. Okay, a payment schedule, again, it's down to you. It could be monthly, quarterly, it could be rolled up at the end, but it should be fair and clearly arm's length. So you're not, again, taking advantage of your IRA. Here's the people that you cannot lend to through an IRA. You might be able to do this personally, but through an IRA, you can't lend money to yourself,
mm,
your spouse, children, grandchildren, parents, grandparents, or any businesses that you own or they own. So cousins are okay,
mhm,
uncles are okay. So that you have to be really careful on who you are lending money to. And this is to prevent, again, taking advantage of the IRA. All right. But so your
I have
job
a
is,
question.
yeah,
What percent of ownership would you say equals control? So if I own 10% of an entity, would that be considered an entity that I control?
no,
Okay.
no, it's usually 50,
Okay.
51. Um, yeah. Yeah,
That's
again, they would look to see because there's like control of ownership and then voting rights. So, but yes, if it's certainly below 25, you're pretty okay, I think. So, um, and I'm sure this is what all of your workshops and cohorts are about as you're an attorney. This is your game, but a formal loan agreement. We're not doing this on the back of a cigarette package. This needs to be um, high level documents to protect you, protect the lender. And if there's a secured loan, obviously that needs to be clearly stated on any documents as well. There are a outside of um, investing or lending the money, there are some prohibited investments that you can make. So pretty much most things are on the table. Things like artwork. Um, so no Monet paintings, no rugs or antiques, no Greek vases. You can do metals, but I'll go through that in a second. No S corporation stock. So you can't invest in a business that's an S corporation. Alcoholic beverages, guns, drugs. Some of these cannabis businesses have become legal now, and some people try and, do that. That's not allowed. And life insurance policies.
okay.
So, yeah.
Okay. So I know you can't invest in alcoholic beverages or like cannabis, but if you are investing in equity in a company that focuses on that thing, is that the same as investing in that thing? So for instance, if there's a whiskey company called Uncle Nearest, private company, if I wanted to get some private equity in that company that, manufactures this whiskey, would that technically be prohibited or is that more of a private equity?
So you're indirect, so you're investing into a private equity company that owns a percentage of that, or of that
No,
alcoholic business,
directly into the company.
directly into the alcoholic business.
Yeah.
I think that wouldn't be allowed.
Okay.
If it was their main, some people, I don't know, they could sell t-shirts and they could be $1 billion company sell t-shirts, but they sell a little bit of whiskey. They're a t-shirt selling business. They're a t-shirt selling company that, you know what I mean? And
Yeah.
so, yeah, if you, mm,
So
yeah,
Sam says what percentage would make it prohibited? Probably any.
if it's their main product.
Okay. Yeah.
Yeah, and again, this is kind of a gray area too.
So
So
Uncle Nearest, like their only product is whiskey right now. And then they're gonna start doing probably bourbons and things, but either way, it it's all gonna be spirits and alcoholic beverages.
yeah, yeah. I mean, hey, in an audit, you need to explain it to the IRS in an audit. Okay, so you just need to make sure that
Yeah.
um,
Okay.
I would stay away from it.
Okay.
Yeah, yeah. And then yeah, as I say, there's some people do cannabis nowadays. There's still off limits, still off limits. Any precious metals need to be held in a vault. Okay, not under your bed. Needs to be held in an IRS approved vault. Um, which is really important. And yeah, no life insurance policies.
Okay. So what about these IUL people try to make it seem like you can invest in these index universal life policies with your IRA. So is that just wrong? Do you know what I'm talking about when I say
Yeah,
IUL?
kind of. I mean, there's different ways of structures, and different custodians do different things. It's possible. Again, you're walking a legal tightrope,
Yeah,
and some
okay.
people are doing it right, and some people are doing it wrong.
Okay.
So, yeah. And as you say, those insurance people will run a tightrope. Ultimately, it's you that gets in trouble. So if you invest into someone's IUL, they don't care. It's
Mm,
it's it's them. So um, my opinion is with the IRA, stick to real estate, stick to lending, stick to the standard things.
yeah.
Um, if it's grey, don't do it within an IRA. I should patent that, shouldn't I?
Right? Don't do it in an IRA. I love that. You should put that on
So
a shirt.
yeah, I mean, what we do is enable to facilitate the setup of that account. So we set up the IRA account with a specialized custodian, establish a retirement LLC in the state of Wyoming. We do all LLCs in Wyoming. We've done thousands and thousands and thousands. We've never had an issue. They're wonderful to deal with. It comes with anonymity. You can do all your transactions. No one's going to really be able to investigate who owns the LLC, what transactions you're doing. We will establish an EIN number with the LLC, open a checking account. That bank account does not come with any transaction fees, which is great. They have checkbook control over the account. So to make a transaction, you don't need to ask us or ask anyone. You're free to do any investment that they choose. As a friend of yours, Ashley, we would include lifetime help and support. So some of
Thank
the
you.
things we've been going over, and we could probably tell you whether it is an IRS approved investment or not. It's sometimes hard to do that on the webinar, but if I looked at the website, if I dove into how much control and percentages, we could probably give the IRS's view of is this possible or is this not? So we often have people, they purchase tax liens and they end up foreclosing on a property, which brings, which is good news. But they have some questions about that. So it's natural to have questions. We're always here to answer those questions. We do about 100 accounts a month. Some months more, some months slightly less. Um, we'll do about 60 or $70 million just this year in rollovers. I don't exactly know because that's their business. Um, but I would imagine that's about on the mark. Probably next year we do 100 million. Got over 100 reviews on Google with 4.9 rating. And if anybody had any retirement accounts that they would like to roll over into the IRA, any old 401ks, other IRAs. There are plenty of other retirement accounts you can roll it over into, pensions, 403bs, annuities, things like that, that can be rolled over. We would assist them in doing that. We would hold their hand through the process. It's your first time, it's our 10,000th time. So we'd be more than happy to help you do that as well. I'll go through some frequently asked questions on the calls that I usually get. It normally takes about 5 to 7 working days to complete everything. IRA account. The client would choose the name of the LLC. We recommend a name that's at least 3 words long because the state of Wyoming is very popular for LLCs. So there's lots of names that people put forward that are already taken. So we normally create everything in 5 to 7 working days. There is no minimum balance. So some people worry that they open an IRA and they have to have a certain amount of money in there. There is no minimum balance, which is important. Is the bank or is the account FDIC insured? Yes. Okay. So if the custodian disappears, your money is insured. That's really, really important.
Is
Um,
that only up to the 250,000 or is that
yeah,
some other limit? Okay.
yeah. And the bank above that will take an insurance policy out on the amount above 250,000.
Gotcha.
Yeah, because we're dealing with retirement and some people have, millions. So it's no good if only 10% is insured. Um, there's no transaction fees. Most people use a routing and account number for their transactions. There will be no fees on that, and that's where the bank get you often. So we've partnered with a bank that do not do that. Every other bank we've investigated working with either didn't do self-directed IRAs, didn't want to give our clients control, or they charged ridiculous fees each time they'd done a deal, which is not ideal. So all the transactions are coming at no cost. And this is one of the most common questions I get. I already have an LLC. Can I use that? And the answer is no. Um, as I explained before, the IRA account owns the LLC. You don't own the LLC. So any LLC that a client owns cannot be used for retirement purposes. So they're only the manager of the LLC. So the IRA account and the LLC and bank account all comes in one structure. So we can't insert an outside LLC into that.
Okay. I
Uh,
have a question from
yeah.
Charleston.
Yeah.
Combing my shit. Oh, come on, bro. I didn't mean to box for real.
Sheesh. All right.
I swear I recognize that guy. I've seen him on TV.
Yeah, I don't know who that is. Crazy.
Okay, there we are. I had that happen in front of 600 people and they played a video that you didn't want to see, so don't worry about it. It's all
Oh
good.
my gosh. I had a feeling.
Um,
I was like, how do you pop in and then immediately have a question? But anyway, so
um, So
um
yeah, we need to start a brand new LLC from start. The
yeah.
LLC does not have to file or pay taxes because it's for the purpose of a retirement account. We will register all of that with the state of Wyoming EIN number, and then we do the onward filing and dealings, for that. So here's what it looks like. We create the IRA account, establish the LLC. Our clients give the name. We would put that forward. We have a bank account that they're fully in control of. So literally on their phone, they can load up their LLC bank account that's in charge of their retirement account and click send money to a possible lender or a borrower for a lien, crypto, gold, however they would like to grow. You are fully in control as the manager. And